Fine. As usual, we're going to start with Nifty. We have seen a huge crash from 11,750, and we made a bottom at 10,150 with a 200-day moving average, which was an oversold condition. And our all indicators were showing sign of oversold. And somewhat, on a daily, we have got a first-time reversal. I was expecting a move till 10,650, and what we have noticed in this sharp fall was all of large cap participated, and mid caps were already oversold, and they went some more 10% down. But uh, what is important to see is still lack of participation. As I was expecting a good short covering to prove that this bottom has some strong support, and this rally is continuing again. It's a short-term correction, but it is somewhat lacking. So what is lacking is the volumes, the conviction, and the international support. So we fell before Dow, started falling, and this is somewhat which may actually interrupt our reversal. And if you notice that a good similarity in Dow or Indian market is all same, wherein in Dow we have all five participants: Apple, Facebook, Google. Similarly, in Nifty we have only five participants like Reliance, HDFC, or TCS. So net and net, the depth of the market. If you check the Nifty 500, the stocks are not performing, but the large caps are moving up and down. That's where the Nifty is rolling in. So one thing is clear, that it is well controlled window in hands of few market players who are just controlling, or maybe managing the indices to make it sustain at some level. Because this kind of movement, of movement of 1200 points on downside and then upside of say 450 points, it is a bit scary when we ask a retail or an HNI investor. They're not making money. It's too volatile, and their expectations are crushed when they usually trade on options. They are, you know, so because retailers have limited money, and they would like to have the faster return, but that is where they are usually hit. This kind of volatility is not meant for traders, and I think trading in this market is lethal for a trader who's actually not professional and dependent upon few advisors. So until unless you know this game, or you have been practicing since long, it's a difficult condition that you may earn out of this volatility. Considering the current move, I feel if you've seen that I have these baselines I've already drawn at the bottom much before, because I want myself to be prepared. If the fall is from some certain level. So this triangular was well made before, and the moment it break down, I was ready to sell thing, and that's where we got huge downside. But once you're prepared with your chart, once you know that where is the support in making, or once you have prepared your structure, you don't hesitate trading either side, or a long side or a short side, because you know that where the screen is advancing. So first of all, if you want to trade in this market, you should be prepared enough for either side move. I mean, if you are predicting or noticing some up move, and all of a sudden if it is down move also, so your preparation should be anywhere, any format you should be ready on. That's where the we get a tag of a trader. It is though volatile, but we have found many good opportunities trading at bottom. I have shared the Yes Bank thing. Yes Bank, we bought at 172, currently trading at 247 or something, went up to 270, but our target was 245. It was very good move. We traded Jet Airways, which made a low of 163. We targeted 166 with a short side of 320 on from upside, and then reversal. So it made a high of 220. So a lot of things are there. It's only that trader has a limited capital, And for me, once I am trading, for me it's get very difficult to tell you each time if we are reversing, or the trend is changing. So I've started giving the morning calls, but you need to twist yourself. You need to work on your trading pattern. So individually we have somewhat, I guess 1100 people now on board. So me and Deepa have been thinking, how we guys can train you as a trader, so you become a professional trader and you make money. So our motive is that you guys make money yourself. So that would be good enough that we discuss the patterns together, we take a trade out together, and all this family group of 1100 make some good amount of money, and steal that money from FIS and DIS window. It is not possible, till the time you guys not come up to learn or share things. We are there to support, but yes, though we have a limited time, we're just trying to be more professional, or how maximum I can give you good, to make you a good trader. But lot of time, energy, and self hard work is required. On our side, we can give you few hours, but at the end, it's only you that you give yourself some extra few hours to prepare out of this whole box. Uh, uh, okay, so I think for a professional, these are the good periods. They make good money out of it, whether by hedging, arbitrage, or a jobbing opportunity, or to find a long-term trade, which is good for any portfolio holder or something. We have seen all the PMS houses. We have seen all brokerage houses. They have suffered on this huge fall, because they're just trying to bottoming all those PSUs. They try to bottom all large caps, but at the end they are hit on their portfolio. And from the top, it is exactly down by 50% on an average. So I don't know when these rates gonna come, because we have elections coming up on 11th December. We have all three states election result. So I guess it's four. And next month I think our results will be, earnings will be out, and on an average, say by 8th or 10th of November, screen will start feeling the burden of election result. And then we have Jan, Feb, March, wherein we have burden of redemption. So if there is a redemption from FIR desk, or a redemption on Indian markets, probably due to we have election, general election in May. So net in net, it's a struggling period wherein we have crude standing at $80 and $74 rupee. Uh, so we have depreciated a lot in terms of rupee, and at the same time, all those PMSs were borrowed, all those AIF was borrowed, international funds at say 66, 67, 68. They have to repay back at 74, probably 73 if it averages somewhere here, or it rupee further weakens down to 76 or 78. You never know how things will pan out. But net in net, it's a hit to Indian economy. Macros are not good. We have already seen some debt cases, internationally, kind of profile being shared on YouTube channels, and that has significantly increased. We have seen a factor of all NBFCs, squeezing on margins, and borrowing costs expected to increase, liquidity crush, and at the same time, there's an overhang of Rana Kapoor being replaced by Bakshi, and the idea is that how stressed are the books, and how long they can survive with this portfolio, what is the current size. Because I don't see any reason that if Rana Kapoor is moving out, the share price from 400 goes down to 170 or 160 odd levels. So it is exactly, the market is looking some transparency into the system, or if Chandra Kochar is moving out, right? So what were the books post Videocon? We know that Videocon was given 3,200 crores, and on what basis? It's only that Videocon file, or we have another files. So it is all bearish overhang in the market, and people are really stressed. I'm talking about all those funds who have been investing. Portfolios are of local PMSs are halved from the top, and it's a worry. And it's not all about Nifty, that Nifty moves 100 points or 200 points. At the end, what we have to see is that is our portfolio moving in a positive zone. So all those Nifty 500 stocks are positive, or they are gaining momentum, or you feel like buying all those stocks. So NBCC from what, 120, it's at 55, 50 odd rupees. Shre Infra from 55, 32 rupees. HDL again back to 20 rupees. So nobody expected such fall, and they were expecting some momentum to come back because mid cap were the first to fall. But it's all about that stress, funded books, and lack of transparency from the promoters, non-performance. So you take each and everything. I mean, the stocks like DHFL, Infibeam, Jet Airways from 800 to 160 levels. So it is all a scary picture once you think on investment perspective. So it's always to be good. I'm lucky enough to be in a technical part, so that I can bottom things, I can judge the topping things, I can handle my portfolio well. But it's again what we expect, that you guys can go forward and learn how to gain more money. We don't require much of money in trading, but it is always a time wherein you feel like leveraging and you make money. There is always no that you ask for a limits or 5 times or 20 times and you make money. You will lose that money till the time you have art of making money on leverage. So I think it's a good return if we get the 20-25% in trading in this rest of 8 months or 1 year. But it is not going to be easy task again. Volatility is going to sustain, and I see international markets to be under pressure. Dow Jones may trading at 25,300 can move up to 25,750, but that's the main resistance zone area wherein it's a formation on the evening star on a monthly pattern there. And I feel there is a downward leg which can hit 21,800. So if I'm looking at Dow Jones or international market, which can sound weak, I think we need to look at a picture that wherein our economy, our indices are standing on all top five stocks, wherein Yes Bank or Investment Bank, they started reversing. So whether these large caps gonna sustain more, or we will find more profit booking there, it is something we have to look forward. Okay, again, I'm saying it's not an easy task. So on a higher side, coming back to levels as per usual, we discuss our resistance stands at 10,650. It may go higher. If you can see that this is a daily chart and we have a small gap at this point. The gap is around 843 and 762. So whether we survive this triangle, this is a long-term triangle. You can see I've made this. The high of this triangle pattern is somewhere around 666. So 10,666 to be precise. I'm looking at 10,650. It's okay. So are we able to survive this? So if we are surviving this, then what sectors gonna participate is the question which comes forward. So it's not only that Nifty starts moving and keep moving up. We need participants, we need sector to participate to balance the falling stocks, and that is where Nifty can stand. So it is always important that which sectors we can look forward. So once we just feel that NBFCs are not working, banks are under stressed, so what will perform? So we can look forward to pharmaceuticals. So our pharmaceuticals are equipped enough to give us that rally. Partial, we can say that it can sustain and balance us. Guys, I'm getting disturbance. Please be on mute. Okay. So this is one, and then if I see IT, this is the major thing that we can look forward to, because this is the result season is gone. We have seen the last expectation. If you see, the Infosys made new high, then results are okay. People were expecting very good, but people have already entered IT much before, standing at 16,000 probably, and since then it has corrected to 14,400 the bottom, and then started reversing, and today it stands at around 15,000. I'll show you that. So IT started performing. So probably, if not now, so maybe another 10 days or 5 days, once the result session is out. So we have already got the results from TCS. Infosys is out. Tech Mahindra is there, then Mindtree is there. So we need to see that, if people have expected this time it has not performed, so probably next time if dollar is going to stay, the positions will change. We can expect that earnings upgrade there. So for next quarter, maybe IT is the one which is going to balance. So if IT is gonna the one sector, then it is going to outperform. So the current situation is not yet confirmed that this IT is going to perform, but I am just guessing that, if it sustains some parameters or if it sustains some levels, we can expect a good upside. So what is that good upside? Good upside could be 17,800 or 18,000 max on IT index, which it can move. I'll just share you the IT index chart. So this is the IT, and this was a short call, which I've already shared in the group. It was around 15,800, went down. It was my support zone, this triangular support, exactly made a triangular support zone, made a morning star pattern, 50% retracement, 1478, made a high of 4975. So what I want is I want a good consolidation in this triangular base, and then it covers this gradually. It covers and this gap which may it can tomorrow. So I want this IT to be back. So it could be a long-term channel where it can move up, and this is going to be the only savior to Nifty. This is a long-term chart you can see. Okay, we have just took that support, and if IT is not performing, then just be prepared for a reversal which will break 10,000. Okay, uh, every formation, every chart has some base, some strength, and if we are lacking that strength, I don't feel other sectors. So private sector banks, we are standing. ICS is standing at 320, Axis again at 600. So more or less, I don't expect RBL Bank or these banks, wherein they are stressed on liquidity, they are going to perform exceptionally well. So what I can maximum focus is on IT or maybe some support from the PSU sector. So I have seen first support today, wherein PSU banks have reversed. Okay, so if PSU banks have reversed, then we have three things. One is IT, one is PSU, wherein it will balance the banking sector, and then we have a bit of pharmaceutical. Rest FMCG, I guess, I think it's gonna be a bit stress and range bound, and other metal is again into range bound. So the idea is of balancing and at least one leader to move this indices up, and even if this one leader is not working, then we will reverse our idea. And this time, if we are falling down, so we are falling on a base of 9700, 9725 sorts. So I'll discuss that once we feel that things are not okay. But we are in a situation wherein we are either side move. So most of brokers, if you just take their advisors or senior level people, they are sitting on a downside. Okay, the technical parameters are hit. They are just looking forward to reverse their position. That means a lack of buying participation from technical teams. I don't know what the fundamentals, but yes, those mid cap funds are started buying uh, mid cap stocks. Obviously, they are eyeing some 3-4 years ahead, so that is fine. I mean, portfolio wise, always good. But all those large cap funds, they are into profit booking, and they're just trying to push themselves into a secure zone. So probably pharmaceuticals could be one they could enter, but perfectly, they've been booking their profit standing at this point. So just, I mean, at this point, it becomes difficult to take that call, because you see, our opening is 100 point up, our opening is 200 points negative. So it is very difficult to judge markets, you know, wherein markets are not open. So you cannot judge that where the market is going to head. But yes, support levels are wherein you can always check and you make some amount of money at least. Okay, so even today, I mean, we have I have shared some free calls, but no calls hit on board. It is all because the opening sustained, and there was a short covering which was much there, and stocks were pretty up. So this is the whole scenario. I mean, we are in a congestion zone, and to get the target out, it is difficult. And still, I'll say that whatever you trade with strict stop losses, it is better to give small portion instead of getting wiped with your portfolio amount. Okay, so we have discussed Nifty.